the financially distressed Thames Water, burdened by approximately £19 billion in debt and a decaying sewage infrastructure prone to overflows, faces a critical juncture. A restructuring deal, intended to stave off collapse and prevent government intervention, is poised to significantly deplete the company's already strained resources. A hearing at the London High Court revealed a stark reality, despite securing £1.5 billion in emergency debt. The usable cash available to Thames Water may fall short of £500 million. This shortfall is directly attributable to exorbitant fees and substantial interest costs associated with the restructuring process. The precarious financial situation of Thames Water, which serves nearly a quarter of the UK population in London and the South East, has prompted unprecedented intervention. Charlie Maynard, the Liberal Democrat MP for Witney, successfully petitioned the court for permission to represent the interests of affected households. In his closing arguments on Thursday, Maynard vehemently argued that the proposed emergency debt package would exacerbate the company's existing debt crisis, creating a self-perpetuating cycle of escalating debt and further financial instability, a situation he termed the Thames Water debt doom loop. This impending financial catastrophe underscores the gravity of the situation, highlighting the urgent need for effective and sustainable solutions. The company, teetering on the brink of insolvency, and its major creditors are actively pursuing court approval for this short-term funding lifeline. This emergency capital injection is considered vital to avert immediate nationalisation, buying Thames Water crucial time to attract billions of pounds in new equity investment. Creditors estimate this necessary equity investment could reach a staggering £10 billion, further emphasizing the scale of the financial challenges confronting the water utility. The significant gap between the emergency debt secured and the usable capital, exacerbated by the high costs associated with the restructuring, paints a grim picture of the company's financial predicament. The substantial financial burden, coupled with the age and condition of the existing sewage network, leaves Thames Water vulnerable to further setbacks and potentially more drastic measures. The outcome of this case has far-reaching implications, not only for Thames Water itself, but also for the future of water provision in a significant portion of the UK. The heavy reliance on emergency funding underscores a long-term sustainability issue that demands a comprehensive and robust solution to prevent similar crises in the future. The high cost of restructuring only serves to highlight the urgent need for a more proactive and financially responsible approach to managing essential public services. The lack of readily available cash, even with significant debt secured, underscores a fundamental flaw in the existing financial strategy and the need for a more comprehensive overhaul of its operations and financial management. The case raises serious questions about the long-term viability of the company's current business model and the overall financial sustainability of water service providers in the face of increasing demands and aging infrastructure.